Scott Groves here with another mortgage mystery. Can I remove my appraisal contingency? This is a very interesting conversation that we've been having a lot in Southern California for over a decade. And your appraisal contingency simply means this. When you go to make an offer for a property, on your contract as the buyer, you're going to be able to tell the seller, hey, we're buying this house for $300,000 or $1 million. But one of the contingencies of me going forward and buying this house is I want to know that the house is worth it. So therefore, let's use our $1 million example. I'm buying this house for $1 million. I have an appraisal contingency that says if the house appraises for less than $1 million, I can cancel the transaction. So you have a contingency, a get out of jail free card, that if the appraisal from the bank, which hires a neutral third-party appraisal and appraisal management system and appraisal middleman and all this kind of stuff, everybody is set up for that appraiser to be neutral. So if the appraisal comes back below $1 million, you don't have to buy the house. You can get back your good faith deposit. So here's the problem. In a rising price environment, meaning the house that's selling for $1 million is selling for $1 million because houses are more expensive, and the last house in the neighborhood that looks similar recently sold for $980,000. But that's kind of where the market is going, right? The seller might say, hey, Mr. and Mrs. Buyer, we're only going to accept your offer if you don't have an appraisal contingency. Meaning, we think our house is worth $1 million. We have several people that are willing to buy it for $1 million. That's kind of what the free market and the market information is returning to us, that we can sell our house for $1 million. We also know that we're kind of at the top of the market for the current time because the nearest house or the nearest comparable property that the appraiser is going to have to use on their appraisal report just sold for $980, and we don't want to give you that free get out of jail card. So the buyer might be told by the seller, if you want to buy this house, you need to remove your appraisal contingency. And if the appraisal comes in at $980,000 in this hypothetical, you, the buyer, have to make up the difference, structure your loan as 20% down on $980,000, and then pay that $20,000 gap to still close on the deal. So this is a strategy that's employed a lot by realtors, buyer's agents, and buyers who are in very tough markets where properties are going up, inventory is low, and the buyers are just kind of having to roll the dice and say, hey, I'm comfortable if the appraisal comes in below the contract price, because it's a really rough time to be an appraiser right now. I will pay the difference, or I'll restructure the loan, or I'll come up with the extra cash, or I'll get some gift funds from mom. Somehow, some way, I will close on this deal. So removing your appraisal contingency should be a very thorough conversation between you, the buyer, your realtor, and your loan officer. Because although the contingency is yours, it belongs to you, the buyer. The lender actually doesn't have anything to do with it as far as helping you fill it out on the contract, nor are we beholden to something that you promised the seller. A good lender can help you figure out, all right, what's the worst case scenario if the appraisal does come in below the contract price? How do we restructure this? Where do we pull the extra cash? What is that going to look like for you, the buyer? So if you're thinking about removing the appraisal contingency, you and I should have a conversation. Your lender should definitely be looping in the realtor. The realtor should be looping in the lender. You all should be having a kind of positive conversation about what the outlook can look like. And then you have to have a lender who can move quickly on the appraisal, because if you're going to have to restructure the deal or come up with extra cash, you need to know that as soon as possible. We've been doing this type of situation. We've been dealing with this type of removal of contingency here in the Southern California market for over a decade. So if you're in a market, I don't care, anywhere in the nation, where it's becoming more customary to remove the appraisal contingency, give us a call. We can help you with your mortgage pre-approval and help you understand how you can be in a spot to remove that appraisal contingency, and anything that you need, whether you just want some information or you want to get pre-approved with us and kind of execute on this strategy to hopefully get your offer accepted. Give us a call, shoot us an email, send us a text, get on our calendar. My Calendly link is down below in the comments, and just let us know. We'd love to help you because we've kind of become masters at this type of situation. Also, if you're enjoying the Mortgage Mystery series, if you could do me a favor, just click the like button, leave a comment, subscribe on YouTube or on Facebook or LinkedIn, leave some type of commentary so we know that we're getting good information out to you that you actually want to hear. Talk soon.